Hello and welcome to a fresh edition of Startup Street. I'm Ritu Singh. Here are the key headlines from the startup space. Indian regulations in the fintech sector can be like a big black box for investors, says MobiKwik co-founder Bipinpreet Singh. Goes on to add there is a miscommunication in the fintech sector. That's the CNBC-TV18 Exclusive. Deep tech startup ProBizSmart thinks focused on smart grid application has raised $5 million in Series A1 led by Unicorn India Ventures. The round also saw participation from US-based and Indian family offices. The current round is a mix of equity and debt financing. ProBiz has raised more than $8 million in funding till date, including this current round. Tata Sons questions Big Basket's slow growth amid quick commerce boom, calling it a strategic misstep that led to the firm falling behind rivals like Blinkit, Zepto, Swiggy and Instamart. The Economic Times has reported, citing sources. The company has asked Big Basket to seek to raise as much as $1 billion via external funding rounds to stage a comeback. US President Trump says he expects America's 25% tariffs on automobile, pharma and semiconductor imports will begin in April. Tells Fox News it is unfair that Elon Musk has to build a factory in India to avoid tariffs. Reiterates that he has made it clear to Prime Minister Modi that India will not be spared from reciprocal tariffs. Tesla is likely to drive into India as early as April. Sources say the company is considering importing electric vehicles from Berlin and has already identified showroom locations in Mumbai's BKC and Delhi's AeroCity. Adds that while Tesla has not communicated or committed to manufacturing in India yet, it is likely to source components worth $1 billion this year. OpenAI co-founder Ilya Sutskever is raising more than $1 billion for his startup Safe Super Intelligence at a valuation of over $30 billion, according to a Bloomberg report. Now, this round marks a significant valuation jump from the $5 billion that the company was worth before. Elon Musk's social media company X is in talks to raise money from investors at a $44 billion valuation. Bloomberg News has reported Musk bought X, formerly known as Twitter, for the same price in 2022. Talks for the new financing round are still ongoing. And healthcare platform Tata 1mg seeks to raise $300 million to expand its omni-channel distribution in order to ramp up quick deliveries. That's a CNBC-TV18 Exclusive. Well, those are the headlines that we're tracking for you today. Now, on to the latest in the Byju's insolvency case, where the National Company Law Appellate Tribunal has refused to grant any interim stay on NCLT's order, which refused the proposed settlement with the BCCI and had directed the Byju's Committee of Creditors to decide on the matter. Now, Riju Ravindran, the suspended director of the firm, had approached NCLAT challenging the NCLT order. BCCI, remember, had initiated insolvency proceedings against Byju's over non-payment of 158 crore rupees, and Ravindran had proposed a settlement seeking the payment of dues. Now, moving on from that, here's another exclusive that we're tracking for you today. Sources tell CNBC-TV18 that healthcare platform Tata 1mg is looking to raise $300 million to expand its omni-channel distribution platform in order to quickly ramp up its quick deliveries. Rashna Dhanrajani has been tracking that story and is here with more. Rashna, tell us about this and the significance of this funding.
Well, we are picking up an exclusive on Tata Digital's latest fundraising plans. Sources have told CNBC-TV18 that Tata Digital is looking to raise $300 million for its digital health platform, Tata 1mg, as it looks to expand operations. The focus is on strengthening its omni-channel strategy with an emphasis on offline expansion and quicker deliveries. Currently, Tata 1mg delivers within 4 to 5 hours in select locations, primarily in Delhi NCR, and also offers an express delivery option for certain products within 30 minutes. We also understand that Citibank has been roped in to manage this fundraise. Tata Digital holds about 63%, that's a majority stake in Tata 1mg, and has previously secured investments from major firms like Sequoia Capital, Intel Capital, Omdear Network, and the Bill and Melinda Gates Foundation. The company was last valued at $1.25 billion in 2022, and this fresh funding funding is expected to strengthen its position in the digital healthcare space amid growing competition. CNBC TV18 has reached out to Tata MG for a response, and we will update you as soon as we hear from them. Back to you.
Well, Rachna, thanks very much for bringing us that update, and we'll keep coming back to you as and when you hear more. Now, moving on to what's brewing today, banking tech provider Zeta has raised about $50 million in fresh funding in a strategic funding round, pushing its valuation up to $2 billion. Now, that is a 1.7 times jump from its previous pre-money valuation of $1.15 billion in 2021. Now, its platform enables financial institutions to launch extensible and compliant asset and liability products rapidly. It has supported more than 25 million accounts so far on its cloud-native processing platform and is on track to add another 25 million. So what's next for Zeta? To find out, we're joined by the company's global CEO and co-founder, Bhavin Turakia. Bhavin, thanks very much, and congratulations on this $50 million funding round. Welcome to Startup Street. Can you share more about this strategic investor, who it is, and the valuation jump by 1.7 times in under 4 years? What really drove this kind of a surge?
Sure, yeah. So it's a strategic investor. It's a Fortune 5 company based in the US, and predominantly we weren't looking out for capital actually. So this wasn't a conventional sort of go out and look for funds like we did last time in 2021 when we raised about 300 million. At the 1.15 billion pre-money. So it just happened to be that there was a strategic investor that wanted to invest. We don't currently have any sort of specific allocation or use of the funds either, but it's going to serve as a sort of a good buffer to add to our existing cash reserves and potentially some of it towards sort of expansion on investments behind our technology platforms.
Well, tell us more about that, Bhavin. What are these expansion plans? How will you use this fresh capital apart from building your buffers? Are there specific product innovations you're looking at, specific markets you're looking to enter? What's the plan?
Absolutely. So Zeta is currently operating in the US market and in the India market. That's where predominantly our clients are. These clients are generally large banks and financial institutions and fintechs that use our platform to launch credit cards, debit cards, deposits, loans, a series of sort of financial services and products. We can replacing legacy platforms and legacy technology providers. We have, primarily few areas of focus, I would say, in 2025. I think 60 to 70% of the company is going to focus on some really large deals that we've signed in both US and India, working with large institutions. In India, we work with HDFC Bank. In the US, we work with Merrick Bank, Cardworks, Sparrow, and many other sort of large institutions to ensure that we can deliver on the contracts that we've signed and expand our sort of footprint with them. And then about 30 to 40% of the firm's focus is going to be on signing up new logos. We're currently in talks with about 15 different institutions in the US and almost half a dozen institutions in India that are interested in some point in time in the journey of the next 2-3 years implementing Zeta for their customers. And so the goal will be to close about 3 to 5 logos from that set. So these are two areas we're primarily going to be focusing on. And as I mentioned, we were healthy in terms of cash reserves from our last fundraise, which is about 300 million a few years ago. We are fairly clearly on the path getting to break even in March 2026. So we're looking at this being sort of a cash buffer for us.
Well, we'll get to that break-even point in just a bit. But, these 25 million accounts that you claim to have in the pipeline to support through your platform, could you give us details on this? What's driving this adoption and which geographies are you seeing higher traction in?
So bulk of that is in the US. There's two large customers, one with about 6 million accounts and the other one with about 14 million accounts that are currently using competitors who are sort of legacy providers who've been around for decades. And these accounts will be migrated over to Zeta after we finish implementation. And then a few million accounts from our Indian customers and the banks and institutions we work with in India.
Okay. Well, Bhavin, you were telling us that you're about to break even. Give us a timeline of when, because in FY24, your parent company, at least, the profit surged about 5.4 times. Revenue growth was 9.42% or so over the previous year. For Zeta, what's FY25 looking like?
Sure, yeah. So, I mean, I think revenue numbers you're quoting are probably for Zeta India, and Zeta currently generates revenue across Zeta US, Zeta India, UAE, a bunch of sort of countries in Europe also. And so they might not be fully reflective of both our revenue and expenses, but we have been consistently reducing our burn rate. We started off with sort of a burn rate was also almost about 60 million. Last year, that is FY25, will end at a burn rate of 20-ish million. And then by the time we get to FY26, which is March 2026, we will actually be profitable a few months before March 2026 already from a run rate basis, and as of March 2026 from a annual, results basis. So this next financial year, starting April 25 to March 26, will be the first financial year where we'll be completely profitable across the globe, across all our investments, and then continue to be profitable from there on.
Okay. Well, FY26 is the year then, Bhavin. What next in terms of milestones? Perhaps a public listing in any of the markets you're in?
Everybody's asking that. So, eventually, yes, I think Zeta will at some point potentially look to IPO, and this might be, in India and the US, kind of, depending on what strategically makes sense. But you asked about, kind of more near-term goals, and there's, I think, really three buckets that we're focused on heavily. One is improving or increasing the number of logos that we currently have. We work with about, several dozen institutions, about 5 to 6 really large ones. I'm hoping to add, between, 4 to 5 other really large institutions across US and India over the course of the next couple of years. Our goal is to double our revenue from where we are. And our goal is to continue investing behind building our technology platform. So I would say any potential contemplation or consideration for an IPO is at least 3 to 4 years away. For now, we're kind of blinders on these objectives.
All right, an IPO is at least 3 to 4 years away. But Bhavin, before we let you go, what should we say is the biggest shift that we can expect to see in Zeta's business, say over the course of the next year or two?
Sorry, what is the biggest one?
A shift in business that we can expect to see from Zeta in the course of the next couple of years?
Primarily focused on kind of growing our existing client base and incorporating those new 25 million accounts into the platform. I think that's really where the primary focus is going to be.
Well, Bhavin, and we wish you the best with those plans. Thank you very much for your time here on Startup Street. It was a pleasure speaking with you.
Likewise, thank you so much for having me.
All right, on that note, we're going to slip into a short break. But on the other side, sustainable devices as a service platform Swish Club has procured about $4.5 million in a pre-Series A funding round. We'll speak to the company's founder about their growth plans ahead and this funding on the other side. Stay tuned. Welcome back. You're watching Startup Street. Now, sustainable devices as a service platform Swish Club has secured a pre-Series A funding of $4.5 million in what is a mix of debt and equity. Now, Swish Club claims that its digital-first approach is helping businesses cut their annual IT costs by 40% and ensuring access to the latest tech with zero upfront investment. This funding is expected to help the company accelerate product innovation, expand its offerings, and drive revenue growth. To discuss this funding round and what lies ahead, we have with us today Dushyant Sapre, who is the founder and CEO of Swish Club. Dushyant, thanks very much for being with us here on Startup Street. Tell us about this $4.5 million funding round. Can you walk us through what this capital infusion is going to mean for Swish Club and how you'll deploy it?
Absolutely, Ritu. Thank you for having me here. So this $4.5 million that we have brought in essentially allows us to accelerate our product development. Number one, that's, I think, most critical, given that we, unlike a lot of other startups, we are fairly young. We are just 1 year old. So product development, enhancing and developing more and more technologies for our customers is very critical at this juncture. That's our number one use. The second use is, of course, now as we are getting more and more customers, we need to essentially have more people, star salespeople who are coming in, engineering folks, engineering talent coming in, that allows us to essentially build and accelerate our product development efforts. And once we end up doing that, I think the third critical factor is expansion. Currently, we serve a certain set of customers that has been working very well, but our eyes are on the larger prize where we want to essentially become extremely valuable for super large enterprises of the country as well. So that's the total use that we're anticipating over the next 12 to 18 months on how we want to utilize the funds.
All right. You've also set yourself a target of reaching over 100 crores in annualized operating revenue run rate in the next 1.5 years or so. What are the key levers that are going to drive this kind of growth for the company?
So there are two factors over here that we are looking at. One is, of course, since we are talking about device as a service as a concept, it's a fairly new concept in India. Historically, you see most of the companies and most of the enterprises in India, they're very used to buying all their IT assets upfront. And what we see predominantly, sustainability and climate impact becoming a very big question mark for every company in their overall operating strategy. We feel that the time is now right for India also to adapt and adopt this entire new proposition where instead of taking goods, instead of taking these IT assets upfront, they can actually take it on a leasing or a renting model where they still get the latest technology, they still get the brand new devices, but instead of paying it upfront, they are paying over a period of say 2 to 3 years. Now, coming to the part around the software part, I think software is where we feel we'll end up creating an extremely unique, differentiated feature for the customers. What we have seen so far over the last 1 year, every customer that we have spoken to is not only looking for devices, and gone are the days when device itself was good enough, right? What we now see is that customers are looking for devices and are also looking for the software to come in together, which is why what we have done is we have built a lot of software in-house and bringing asset management portal, mobile device management, device cleaners, all bundled into one, which essentially takes away that entire headache of managing multiple partners.
Well, speaking of building products, we understand you're looking at an agentic AI-powered device telemetry product, which you're looking to launch in April this year. What exactly is this product, and what is the kind of additional revenue this is going to unlock for the company?
Yeah, that's a great question. So I think the way we see it, given AI has now become available and has become mainstream, we started looking at what can we do more for our customers in a much more fundamentally different way. And one of the big challenges that we see is that this entire concept of support, this entire concept of employees in different companies, I'm sure you and I have gone to our IT guy at some point of time and said, hey, look, my laptop is running slow. Can you do something about it? And we felt that what can we do? Fundamentally, we can change so that this question does not exist ever. And that's where we see that we want to essentially automate and eradicate this entire concept of L1, L2 IT support that is given by companies to their employees. In order to do that, we have been able to build this telemetry product. What this telemetry product does is it essentially automates the entire support that is required for the employee. At the same time, it is able to help IT visualize and have a clean observability, a clear observability as well across their entire asset base to know which devices are working well, which devices are actually having an issue, and what kind of hardware is not functional anymore. At the same time, it also is able to create a unique score which helps CIOs essentially decide which devices I need to change and by when. Once you bring in all of this together, thanks to the power of agentic AI coming in, we feel we'll be able to help companies cut on their capex and secondly automate the entire L1, L2 support, which basically means this entire team, the IT teams will be freed up and they'll have more time to essentially focus on business projects.
Sure. Quickly, since we're running out of time, surely India is not the only, country where you're going to find clients for this kind of a product. Are you looking at geographic expansion outside of India? What are the markets you're eyeing, if at all?
Yeah, absolutely. So see, I think given that we are all coming from India, we're based out of Bangalore, our first focus, fortunately, has been the fact that most of the larger organizations today have their IT teams based out of Bangalore. So that's a great advantage that we have in terms of getting us started from a telemetry standpoint. But gradually over time, we are definitely seeing that there are enough customers who are now calling us and asking us, can you expand into other adjacent markets? So we definitely see, and our eyes are there on Middle East and Southeast Asia at some point of time to expand. From a telemetry product standpoint, I think the feedback that we are getting from our pilot customers is that this can actually work across the world. So we haven't taken a conscious call on what exactly we are going to do, but the picture will get clearer closer to the launch and over the next 3 to 6 months.
All right, and we'll touch base with you in 3 to 6 months when that picture does get clearer. Dushyant, thanks very much for your time here on CNBC-TV18. It was a pleasure speaking with you.
Thank you so much for having me.
All right, moving on. 2025 will be a steady year for startup investments as valuations correct and activity picks up. That is a word coming in from Gopal Jain, who's managing partner at Gaja Capital. Now, he was speaking to my colleague Shilpa Rani Peta on the sidelines of the IBCA conclave, where he said he's betting on financialization, digitization, and the discretionary consumer space for this year's themes. Take a look at that conversation.
I think 2025 will be another steady year. but if as valuations correct, there could be a pickup in activity.
Right. And where do you see the pickup happening in terms of activity? What are the sectors that you're really betting on?
There's some very powerful themes in India. Long-term secular trends around financialization, digitization, discretionary consumer, B2B software. There's a significant amount of excitement about these trends.
Right.
We might have some ups and downs in terms of pace and trajectory. And there is a significant amount of capital that's interested in these opportunities.
Right. In terms of the capital also, over the past couple of years, the main theme that we're seeing emerging when VCs are writing their checks is sustainability when it comes to the business, a clear path to profitability, right? How are you looking at this year? Have you seen how a change in how founders are also doing business when they come to you to pitch also for capital, right? Are you seeing a change in focus in founders, and how are also VCs looking at companies when they're coming to raise funds?
There's been a significant shift
Right.
since September 21 in the global world of venture capital. Companies have gone back to basics and a focus on what you describe as sustainability and what we see as unit economics, the ability to grow without raising capital, a focus on consumers rather than investors.
Right. Fair enough. And do you see more in terms of exits? Do you expect more primary market IPOs, or do you see more acquisitions? How do you see that panning out this year? Where do you see the larger opportunity? Because even the larger conglomerates we're seeing are looking at smaller companies. We saw HOL buying Minimalist. We saw ITC buying Prosuma. Do you see more activity on that end, or do you believe IPOs will continue to rule the trend here?
These are not two things at the cost of each other.
Okay.
And the Indian IPO story was a spectacular story last year. We'd all love for that to continue. It's created a significant amount of exits for the industry. M&A needs to pick up. Large businesses in general in India, but also global companies. So M&A can certainly pick up speed, and we're all hoping it will. But right now, the expectation is that this IPO market will continue.
Right. I mean, even global investors, how are they looking at the Indian market currently?
Many global investors look at India through the lens of emerging markets. Emerging markets is right now struggling relative to, let's say, the US. But India independently is an increasingly strong story.
Right.
And the India private equity story is no longer about global investors. It is also about domestic capital. And the interest domestic capital has in the India private equity alternative story is becoming bigger by the day.
Right. Because, earlier in one of the panels, there was a discussion about how India is a pricey market. What is your view on that?
Well, since GFC, India has never been a cheap market except for 2 or 3 very brief occasions. And that's how India has been. It's always been a year or 2 years ahead of fundamentals.
Right.
I think we as Indians are very optimistic people.
Okay.
I don't see that changing because we have a very long runway, which is not very difficult for people to see. We are a positive, forward-looking set of people. So corrections in India in the last 15 or 16 years have been far and few, brief, but mostly the markets have been a year to 2 years ahead of fundamental.
All right, Gaja Capital there, quite positive on the India story. On that note, it's a wrap on this edition of Startup Suite. But stay with us, more news and updates will come up on the other side.